Hello, we're going to show how to use the B2T engine to calculate the items of U.S. international taxation, or INTAX, for the parent company in an entity group. We will also overview the relevant output data. We know that a multinational corporation may be subject to taxes of multiple countries. The home country tax authority often has special rules to help the company to be competitive in the global market. For example, in the US, the company may be entitled to foreign tax credits. Such international taxation logic can be rather complex, especially since the enactment of the Trump tax reform, for example, GILTI, BEAT, FDII, etc., just to name a few such special items. The B2T engine will handle all that automatically and will include those items in the overall tax calculation. In this overview, we will use a trivial example to show that the engine automatically calculates the US INTAX items. There are several types of such items, and we will put each in separate tutorials. Here, we will focus only on the overall structure of the relevant output data. So here's our simple hello world example, where we want to calculate taxes for a US company P that has a revenue of $1,000. Normally, there will not be any INTAX processing, since INTAX generally is for a multinational corporation, which typically is the parent company in a group of related business entities. Therefore, the B2T engine will perform the INTAX calculation for the parent company in an entity group, but not for the standalone entity. So let's just create an entity group then that happen to have just one company in it, so that the B2T engine will start doing the INTAX work. So here's our input file. We have our US company P, and we want to tell the engine that there's a group that happen to have just one company P in it. So we have a company P in this group, P group, and the engine would know that. And we want to further tell the engine that this group has an obligation to do the tax calculation. So we let the engine know that P group has such an obligation to be fulfilled to calculate tax according to US GAAP. And finally, in the recurring input sheet, we're going to tell the engine that for this particular period, please do a tax provision for the group. So the engine now knows for that particular accounting period, it needs to do a tax provision for that particular group. So now that's it. Let's save it. And we're going to use the easy button over here to submit it to the B2T engine. So the engine may be starting code. It may take time to warm up, a few seconds. So it's down. Let's open the output file. We now know the engine is doing calculation for this whole group, so we're expecting some international tax effects being calculated. Let's open the output file. So here is our company P, and the tax consolidation is also being performed for that group. And we go to the provision for that company P, the provision sheet. So this is the usual calculation. We have only one account that has a revenue of $1,000. So here we see the current tax expense calculation. And particularly notice down over here, We have the foreign tax credit for the current tax effects. That is 0. And we see the deemed distribution tax, which in the US is also known as subpart F, and the GILTI tax and FDII tax, all the items of int tax for the US IRC. And similarly, in the deferred tax, we also see the effects of foreign tax credit being calculated, and there's no special items that has deferred tax effect in the rate reconciliation. We also see the FTC effects as well as all those special items. Okay. So now, how does those items keep being calculated as 0? And we know our trivial example is 0 because the all engine know is the income of $1,000. There's no other information to help it to decide. But the engine is still go through a rigorous process to do the calculation. And the process is being shown in more detailed report. Let's take a look at the FTC calculation. Even though it's all 0, it says for this group of things, we're calculating for P, and we see, look at all those buckets. We know that the FTC calculation is down by the buckets. All the buckets are being considered, and here is the FTC limit is being considered, and the current tax effects is being calculated. Even this journal, if it were not 0, there would be tax journal entries would be shown as well. Deferred tax of the foreign tax credit are also being considered, the anticipatory effects as well. So it's 0, but the engine did a thorough consideration in the calculation process for that item, foreign tax credit. And not only that, let's go down to further details for that particular provision. And we have the quick shortcut. We go down to details, and we see the FTC calculation by account. Here are the account level details. It basically tells how much each account contributes to the FTC. All the details are being shown up here to let people see the account level details that supports the FTC calculation. Okay. And the same detail for the other items of the int tax as well. You see the FDII account level detail and so on. So we go back to the provision sheet. And with all the account level details combined together, we see the deemed distribution, we see the GILTI calculation, and we see the FDI calculation. We see all that, and all those calculations lead to the resulting items in the rate reconciliation, in the deferred tax, in the current tax calculation. Now, for those who work with U.S. international taxation, by looking at those items for here, the current tax calculation, you have the foreign tax credit and subpart F, GILTI, and FDII. One question may come up. That is, what about the BEAT, the base erosion and anti-abuse tax? It should have an item somewhere here as well, right? It turns out that the applicability of the BEAT would depend on data outside the current accounting books, specifically the 3-year average revenue over 500 million. Because the B2T engine does not store any user data, so it is unable to determine whether BEAT is applicable or not. The engine needs the user to explicitly specify that the BEAT is indeed applicable for the company. So how can we do that? let's go back to the input file. So we're going to close this output file. And here's, we come back in the input file, and we want to tell the engine for the company P, the beat is applicable. We go to the setup input sheet. Here's our entity P record. And in the property over here, we're going to tell the engine that the the beat is applicable. The property is USA beat underscore is applicable equal to true. So we effectively tell the engine that the beat is applicable for P. Now we save it. And we go back to the recurring input sheet and we're going to submit it again. So it's done. Let's open the output file and examine. We go to the provision sheet, and we want to focus on beat because we turned that flag on. We want to see and making sure now beat is indeed being included in the tax calculation for P, the current tax calculation. It is 0 because our example is trivial, but we do see the engine is considering the beat tax for the company P. And further down, let's take a look at the detailed report for the beat calculation. So here is that the US beat calculation. So we see that the engine will automatically perform the in-tax calculation for the parent of an entity group. It not only produces reports on the calculation logic like this, but also trace back to the account level details. So we go to details and we see all the account level details for the beat. And in our case, it's trivial. It doesn't have really much contributes to the B tax, so it's all 0. But the engine is thinking about that. So lastly, a user may choose to skip the in-tax altogether if he wants to focus only on the domestic tax provision and domestic tax consolidation. He can do so by adding a configuration parameter in the header section of the recurring input sheet. So let's just quickly take a look at that. Here the output, we're going to close that. We don't need that anymore. So here's here's the input file, the recurring input, and we're going to add a configuration parameter here to turn off, to skip the int tax calculation. So like this, we supplied a configuration parameter is to skip international taxation. We set it to be true. Then the engine will not calculate the items of in-tax anymore. So to summarize, the B2T engine will automatically calculate the items of international taxation for the parent company of an entity group. So we have our example over here, and the engine will automatically calculate all the items of international taxation. For the US, this includes items of foreign tax credits, Subpart F, GILTI, FDII, and BEAT. There will be dedicated reports in the output file for each of those items, traceable down to the account level details. And these items will be included in the tax calculation for the parent company, as we have seen a moment ago. Optionally, a user can choose to skip these calculations altogether if he wants to. That's it. Thanks for watching.